Hey YouTube family, Mike Jones here, back with another video on my channel where we talk about all things investing and personal finance with the genuine hope that we will be able to inspire someone to go ahead and get started with their financial freedom journey today. With that said, it would be really awesome if you would take a moment to go ahead and smash that button for me and hit the subscribe button as well to show some support. That'd be really awesome. Thank you for those who have already shown support and given continued support. Really helps out the channel. We are currently over 300 subscribers right now, so we need another 200 before the summer hits to reach our miniature goal. But with that said, let's go ahead and get into the video. And thank you for showing up. So as you can see, we are at $16,772.81 currently. And that's bound to change during the recording of this video because the market is still open. Now, one of the things that I want to say is, we're up $6,377.69, which is a 61% return, which is absolutely phenomenal. But this is about $118 from our all-time high in this account. Now, our previous all-time high was more predicated on the fact that Tesla was doing phenomenal. It was almost up to $800 a share. But when we look at Tesla right now, which I'm going to go ahead and scroll down to that first, Tesla is at $676.20 a share. So it's actually lost money in the last couple of days, and it's down from that previous high where it was like $110 loss per share. So with that, that's actually very exciting news because our portfolio is so close to our all-time high, and yet Tesla's down. So that's a great sight to see because when Tesla goes back up, we're gonna exceed that all-time high and hit that $17,000 mark that we've been talking about for a couple of months. But let's go ahead and go through the portfolio. We'll start from bottom and go all the way to the top today, just to do something a little different. So we have $40.88 in buying power, and we're just letting that accrue until we figure out what we want to go ahead and purchase. We have an idea, but considering that we have a couple. Sorry about that. That was my Apple Watch. But considering that we have a couple of dividends coming, especially from SPG, which is going to pay us $1.30 a share, I'm kind of excited about that because that's going to be at least $8 that we'll have in that buying power to buy another stock. But as you can see here, we have GE, and we have 101 shares. It was our very first purchase in this portfolio, and the market value is $1,371.58 currently. And we bought this at an average price of $9.90 a share. We did get one share free. And so right now, we are up $371.08. It cost us $1,050 to get that, but that's a 37% return. And if you know anything about my portfolio, you've known anything about this journey, I actually started off like basically down 50% in GE, those 100 shares that I had. I have 142 shares as a collective between the two brokerages, but I was down like $500 in this portfolio in particular. So to see it up almost $400 is fantastic. Next up, we have VNQ Real Estate, which has had a major recovery. Since I bought this stock, it's been down. So the first two stocks I ever bought in my Webull portfolio were completely down. And this one was down about $12. And I figured, it's Vanguard Real Estate, like ETF, it'll do fantastic. But what I didn't expect was to have the market crash and the pandemic. So that kind of affected the performance of this ETF. But as you can see, it's been in total recovery mode, and we're only 96 cents down, which means we have a 1% loss on that position. Next up, we have Ford Motor, 16 shares of Ford Motor. Now, I believe I paid for 12 shares of Ford Motor, and we got that average price of $7.98. And then we, over the time span of having this portfolio and getting referrals, we received 4 shares of Ford Motor. And so we are up $71.93 with a 56% return. Now, the thing about the free shares in the Webull portfolio, that's actually something that the Webull portfolio doesn't count towards your gains. So I'm actually higher up as far as like how much I've made overall in this portfolio. I would say it's an estimate of about $6,800, maybe $6,900 in this portfolio, but it doesn't count that in this like when it shows you it right here, the performance, it doesn't count that because the free shares, they just give you the average cost, and then whatever the performance is from there is how it bases the gains. But we're up like an extra $500 because of the free shares that we've kept and how they've performed. Bank of Nova Scotia, we have 20 shares of that. It's one of our favorite stocks. We bought at an average price of $45.56, and that cost us about $911.24. And we are up $332.56 for a 36.5% return. It takes up almost 8% of our portfolio, but we're totally okay with that. It's a very steady stock, and it's done nothing but increase since it previously dropped. Now we have WWE, which is starting to perform excellently. We bought WWE at an average price of $44.12, and we bought that 1 share. And we are up $13.19, which is a 29% return. So a gimmick stock, a stock that we were just buying for nostalgic purposes, has started to perform pretty well. Southwest, we have 15 shares of Southwest, and this is my absolute favorite airline. My girlfriend also works for Southwest. And so our unrealized profit on this is $334.08, and that's a 54% return on our position so far. So we're ecstatic about that, and we can't wait to see what Southwest does in the near future. Starbucks is the next company that I wish I would have bought a couple more shares of. But we got in at $65.70, and we are up $47.45 for a 72% return. Now, I expect Starbucks to get to about a $150 share price. Now, when that's going to happen, I'm not very sure, but that's the number that I have in my head for Starbucks. And so I probably will buy a couple more shares of that, but it's fantastic to see the performance of that singular share. Next up, we have Snapchat, which we got 5 shares of Snapchat at an average price of $8.37. But the funny part is these are all free shares. So that $8.37 times 5 is what I've actually earned off those free shares, plus the $273.65 for the 653% return that I've gotten off of Snapchat. So everything that Snapchat is just gains for me because I got the stock for absolutely free. But this is what it settled at when it settled into the market, $8.37 a share, and now it's the last price was $63.10, which is absolutely insane. Next up, we have Viacom CBS. These are another 2 free shares that we received from referrals, and it settled at $12.77 a share, and it's up to $42.04 a share. So we've gained $58.54 a share for a 229% return. And then we have JetBlue Airways, which was 2 other free shares that we received, and we received those shares at $10.13 a share. It's up to $20.98 a share, so we've gained $21.70 a share, or altogether, for 107% return. So that's fantastic. And then Halliburton was a company that I did purchase myself, and we bought at an average price of $10.58 a share, and we have gained $20.66 a share with the two shares that we have. So we're up 97% on that position. Meredith was another company I went ahead and purchased, and we bought at an average price of $13.39, and we've gained $16.88 for 126% return. Uh, uh, Tanger Factory was a company that we bought due to the referral of Andre Jick. We were a little less bullish on it than he was, because his reasoning for buying it was the fact that it gave a ridiculous uh, dividend, which was like $1.40 or something ridiculous like that on $6 share price, and I just found that to be highly overweight, and it was. The company eventually had to get rid of that dividend, but now it's turned into a growth stock. Interestingly enough, so we have a 170% return because it's gained $10.43 since it lost its dividend. And this is a company that deals with malls and outlets and stuff like that, kind of like a mini Simon Property Group. So, a company that I would definitely take a look at going forward. In the past, their like 5 year chart said that they've lost like $14 over the past 5 years. It looks like they're heading towards a recovery of getting back to that price. So this stock could get to a $30 share price in the near future. Next up, we have Diageo, which is a company that I bought because I was super bullish about it. And I bought it at $140.69, and it's gained $34.84 for a almost 25% return. So that's fantastic. We also have DraftKings, which is a company I'm really, really bullish about and plan to get more shares of. We bought at an average price of $33.14, and we didn't even know DraftKings was in the market yet as an IPO. But a friend of ours put us on to that, and we were able to get in at this share price. And since that time, we've gained $58.12 for a 87, almost 88% return. We also have Kimberly Clark, which is a company that I feel is just outstanding. They supply a great dividend, and they are a model of consistency. We bought it at an average price of $141.05, and it's down $4.35 for a 3% loss. But we know that eventually it'll get back to the right share price and continue to increase and give those great dividends. Next up, we have Lam Research, which has been one of the most unexpected stocks that I've ever bought. I bought Lam Research because it's in my area. I've known about it for a very long time, and it's a company I believe in. And so I went ahead and bought it at an average price of $271.33, but I was only able to buy one share. I wish I could have bought another share, but as you can see, it's just went insane over the last couple of months. It's up to $390.65 for 144% return. We also have Amgen, which is a pharmaceutical company, a major pharmaceutical company that we bought at $225.57, and it's up $22.78 for a 10% return. We also have Goldman Sachs, which has done pretty well. A little bit to our surprise, we didn't expect this much growth. We expected growth of about $70, but to see it continue is just fantastic. We bought it at an average price of $204.26. It's up $126 for a 62% return. Next up, we have Clorox. As you can see, Clorox we bought at $203.80. we're down $13.69. So this is actually a perfect time to go ahead and buy Clorox if you're a fan. It's down about 7% right now. But moving on, we have Hershey. Hershey, we bought at an average price of $135.37, and we've gained uh, what is it? $24.13 for a almost 18% return. Berkshire Hathaway went ahead and bought one share because we couldn't buy the Class A share. We bought at an average price of $185.88. It's gained $79.62 for a 43% return. Now, what I can say about that is, like, when you listen to Warren Buffett, or you get behind things that Warren Buffett backs, I would say 9 times out of 10 you're gonna make good money off of it. And so that's what I went ahead and did. Is I believed in the fact that Warren Buffett is basically heading that company and has made it into what it is. And so that's why we went ahead and got in on it. So OKE, or One Oak, we bought at an average price of $32.32. We bought 5 shares. That is now up to $50.95. So we've gained $93.15 for a 57.64% return. Now, OKE, or One Oak, is still at a very reasonable price. It's actually a company that should be at around $70 to $75 a share, but it's not, due to the pandemic and recession, all that good stuff. And so, if you want to go ahead and get in on OKE or One Oak, I would highly suggest doing that at a time like right now. Aflac is another company that I'm a fan of. I seem to be a fan of insurance and financial companies, but as you can see, we bought at an average price of $36.93. We are up $29.40 for a basically 40% return. Then we bought Helmrich, and this was a company we bought, took a quick glance at, liked what we saw, and bought because, we wanted to get rid of the buying power. This is when we were still a little immature, or, not seasoned in our investing journey. And so we went ahead and bought this company at $20.94. And since that time, we've gained $4.88 for a almost 23% return. Tesla, everybody's done well in Tesla if you've bought it in the last year. So um, my average price is $222.76 for 6 shares of Tesla. And we've gained $2,722.43 for a 203% return. Next up is Assurant. We bought at an average price of $107.57 for that one share. We've gained $39.39, which brings us to a 36% gain. Next up, we have BCE. BCE is something we bought at $43.01. It's up $3.21 for a 7.5% return. Now, I think BCE is a Canadian communications company that I bought. So not bad performance considering what it is. BMO is another company we bought. We did not expect BMO to go up 40 plus dollars, but as you can see, BMO is at uh, a profit of $37.17, which is a 68% return on that average price of $54.50. BP, not much I need to say about this company. We bought at $18.50 just to kind of try it out, and we've gained $29.31 in that time. So 31% return. Now, when I say to try it out, it's not because I didn't know about BP and I didn't research BP. I did all of that. Um, but when you look at some of their stock data, um, a lot of the stuff points to not investing in BP, but for whatever reason, they seem to do well with things in the negative. And so that's what I'm talking about when I say just to try it out. Because when you look at like their earnings per share, it's negative, and they're still paying out that $2 dividend. And usually that's a sign of a company that's gonna, have a fallout or something like that. But BP usually consistently pays out those dividends and such. So also the fact that it was down in share price was another. I saw another opportunity to make a couple quick gains off of that, even though we're a long-term investor. Next up, we have CVX, which is Chevron. We have one share at an average price of $96.20. We've gained $6.54 for a 7% return. We also have John Deere, which is another company that has outperformed my expectations. And, when you start your investing journey, that's something that um, tends to happen. You'll buy companies thinking that it'll grow this much or this much, expecting that much, and then it'll outperform what you thought it could do. And then in on the other side of things, you could buy a company that you thought was at its low and underperform when you buy it. So it's a balance. But when you buy solid companies like John Deere, which have you know paid out consecutive dividends for over 30 years, there's not much to worry about. So we bought this share at an average price of $157.79, and we're up $219.11, which is a 139% return. Next up, we have Eaton Corporation. We bought at an average price of $88.29, and we've gained $52.16 for a 59% return. Next up, we have Duke Energy. We bought at an average price of $88.73, and although we have one share, we've gained $8.30 for a 9% return. Now, when you see these shares or these companies I've only bought one share of, it's not because I'm trying to get in on everything. It's just the fact that at the time I only had enough money to buy one or two of these companies. And then the companies that you see with multiple shares, it's because I believe those companies would be able to stabilize my portfolio. And so far, I've been correct. Mercury General was a company that I went ahead and got in on, and we bought them at $42.43, and they've gained $21.37 for a 50% return. We also have Fastenal, which is a company that I was going to buy in tandem with Fastly, but I only had money for the one. So I paid $42.82, which was a similar price to what Fastly was. And we've gained $7.31 for a 17% return, which is not bad. But Fastly ended up doubling quickly after that. And now Fastly has started to decline a little bit. So we might be able to get back in on that bandwagon. Next up, we have W.W. Granger, and we paid $328.85 for W.W. Granger. We're up $17.77 for a 22% return on that position. Allstate was another company we went ahead and bought, and we bought at $103.34. It's gained $13.76 for a 13% return. Whirlpool. We bought Whirlpool at $137.04, and as you can see, it's almost up $100. So that's a 73% return for Whirlpool. Shout out to them. Keurig Dr. Pepper, we bought at an average price of $28.41, and it's gained $6.59 for a 23% return. Bank of America preferred share was a company I shouldn't have bought. Not that I shouldn't have bought Bank of America, but I shouldn't have bought Bank of America preferred, because the company, like the stock itself, they just don't perform well. They only go up and down very little. No real consistent growth for preferred shares. The other thing is that the dividend, although it's greater, like I said, you don't get that growth that you could get with the with the just the regular share. So that's a learning or a lesson for me in the future, to not go ahead and buy preferred shares. But anyways, we have Apple here. We went ahead and bought 10 shares because we've been very bullish on Apple since the very beginning. And so we bought 10 shares at an average price of $121.38. We're up $114.82, which is a 10% return almost. So we're glad to see the growth there. We want Apple to actually kind of slow down. If it declines a little bit, that would be phenomenal as well. So we can go ahead and buy at a discount. But if not, then we'll buy at whatever, because to us, Apple's real share price, or the price that it should be at, intrinsic value, all that kind of stuff, would be $220. But anyways, next up we have Walgreens Boot Alliance, and we bought at an average price of $38.71. And we are up $154.67, which is a 40% return. This is a company that I've been very, very bullish on. I told people, go ahead and get in on this. You don't want to miss out. I still think there's an opportunity to go ahead and get in. It's only $54 share price. So if you haven't already, get some Walgreens Boot Alliance. It's a super solid company, been paying dividends for a very long time consecutively, and just a major model of consistency. Next up, we have Shaw Communications, which we bought at an average price of $17.87, and we've gained $44.63 for a almost 50% return there. And then we have Telus Communications, which is like its rival, and we bought at an average price of $18.52, and we've gained $12.58 for a 11% return. So both are doing fantastic. Both pay out nice little dividends, and both are super solid. Next up, we have CVS Health, which was the company I wanted to buy in tandem with Walgreens Boot Alliance. But unfortunately, I wasn't able to do so. So since the time that we bought it, it's up almost $8, which is a 12% return. But we still plan on going ahead and buying multiple shares of CVS Health going forward. Genius Brands is a company I bought because they had a cartoon with Warren Buffett. Now, whether this company blows up or not really doesn't matter to me, but the fact that we're up 31% is fantastic. Next up, we have Workhorse Group, which is our biggest loss in the portfolio. We have 4 shares at an average price of $21.65, and we are down $34.30 for a almost 40% loss. But again, this is a great time to buy if you haven't gotten in on Workhorse Group. A 40% loss is just another discount to us. You have to really have that Warren Buffett mindset if you're going to invest for the long term. But going on to the next stock, we have Main Street Capital, which we bought at $30.36. I didn't think Main Street Capital was ever going to grow because at the longest time it was $30 for like a good 9 months or so. But we're okay because it paid out monthly consistent dividends. So in the time that we've had it, the 3 shares have generated $32.81 for a 36% return. We also have AbbVie, which we have 1 share of, a company we are very bullish on. If I had the money, I would have 100 shares of AbbVie. That's how much I'm a fan of AbbVie. But I bought this share at $86.26, and I've generated, or the stock has generated $21.26, which is almost a 25% return. We have Coca-Cola, which has done its thing and just stayed consistent, not been super volatile. And so we're up 11 cents for less than a 1% return. But Coca-Cola is not going anywhere. If anything, the share price will increase over the next 2 years. But next up, we have Rocket Companies, which is a company I'm a big fan of. We've paid $21.12 for 2 shares, or that was the share price. So we paid $42.26 altogether. But we're up $3.08 for a 7% return, which is cool. Next up, we have Airbnb, which we bought at $149.06. And I know that's a steep price for an IPO, but this is an IPO that has the potential to be a $300 stock. So we are up $29.94 for a 20% return so far. Then we have Sweatson Energy, which we received at $3.30 share price because it was a free stock. We're up 89 cents, which is a almost 27% return. We also have Alamos Gold, which we also received at $8.13 share price. It's up 19 cents for a almost 2.5% return. Hyliion Holdings is another loss that we have, which we bought the one share at an average price of $16.23. We've lost $5.47. Another great opportunity to go ahead and get in since the company's down 33% or 34% in the stock. And then we have ADT, which is another company or a stock that we received for free at $7.74. It's gained $1.68 so far for a 22% return. So with that said, that's pretty much all I wanted to go ahead and talk about today. When you look at this, you can see that we're starting to, like, if you look over the year, we've really outperformed the Dow Jones, this Dow Jones index. The only one that is still outperforming us is the Nasdaq, and it's not outperforming us. We're actually outperforming the Nasdaq over the last year. I believe that it was outperforming us, but I don't think any of them are outperforming us. Yeah, so over the last year, we've outperformed every major index that people invest in. So I'm super satisfied with the growth of my portfolio. As you can see, we're only down $5.85 today, which is, milk and cookies. But let's see. Over the last year, a year ago, we were at $2,313.79. And now you know what we're at. So to see the growth of the companies and, the stock and this account in general is just fantastic. We're really happy with everything that's going on there. So thank you so much for watching this video. Make sure to like, comment, and subscribe. Um, Hit that notification bell to never miss out on a video that I post. But with that said, I will see you in the next one. Thank you so much, and God bless.